Duolingo is on a mission to provide the best education available in the world online and to make it universally available. You can see that they've gotten incredible traction where the number of users on their platform up 36%. This daily active users hitting 50 million in the third quarter. Monthly active users around 135 million, up around 20%. 11 million paid subscribers. The way to think about this business model is it's largely about the freemium experience. You're getting literally tens of millions of people using it for free. But then if you want to get added benefits, for example, unlimited hearts, that way you can make mistakes and just keep plodding along, or you want to have mistakes review or to have practices, there are premium subscriptions like Super Duolingo along with Duolingo Max, which leverages AI. And that also, has the advantage of no advertisement. So this is predominantly a subscription business where about 10% of their customer base is driving, a little bit under 10% of their customer base is driving fantastic results. And you can see revenue up around 40% growth, 270 million in the most recent quarter. You could see margins, very lucrative EBITDA margins around 30%. So this is a very cash flow generative company. And yet the stock price has lost nearly 70%, 70%, nearly 70% in the last 6 months. So what is going on with Duolingo shares? So in this video, I'm going to walk you through my personal take on Duolingo and then actually take a step back to think about how to invest in general. Some thoughts there because Duolingo isn't the only stock experiencing some volatility. I'm going to share a little bit about my own investment journey towards the end of this video. But let's talk about why the shares have sold off. Where do I think it potentially goes in the years ahead, along with my thoughts on how Duolingo fits relative to my checklist. And it's the unrivaled investing checklist that I use with every video, with every company, whether or not it's a micro cap or a $1 trillion company. The same checklist applies, and we'll talk about that as well later in this video. As always, my name is Daniel. You're watching Unrivaled Investing, so if you enjoy educational content, I do appreciate you hitting that thumbs up, hit that subscribe button. So why is Duolingo getting hammered? Well, a big part of it is actually valuation, which is that it was trading at a nosebleed valuation of around 30 times sales, and it's compressed significantly. Because if you look at the underlying fundamentals here, you're seeing a business with fantastic growth, with fantastic profitability or rapidly improving profitability, fantastic cash flows. That change from 30 times to under 10 times sales, that's driving most of it. So you're talking about valuation compression. And I think it is a warning, a lesson for investors that generally when you're looking at companies trading at 20 times sales, 30 times sales, it's just so hard to generate an attractive return going forward because of this risk that in one quarter, your valuation can reset from 30 times to 10 times, possibly even lower. So we're going to talk about that further in this video. And so another key aspect. So why is the valuation coming under pressure? So in the third quarter letter, CEO founder mentioned we're prioritizing user growth over monetization in the A/B tests. They're thinking about the long term. It's less about growing our revenue. They're saying we need to make sure our customers are sticking at it and we are growing our customers for a long time because we're tapping into this huge market. They have this conviction that AI can fundamentally change what's possible and how we teach. So a huge opportunity yet again. But they are sort of saying, yeah, our guidance is going to reflect that we're doing this A/B testing because we're prioritizing growth in users versus forcing them, encouraging them, persuading them to switch over to the paid offering, which once again is just shy of 10% of the customer base. So when you look at their guidance, and this is what drove the stock to fall, you're seeing their revenue outlook is decelerating significantly from around 40% to around 30%. You can see margins around the same. EBITDA is actually lower sequentially. So you're seeing these data points that's giving investors pause. I think another element that could add fuel to the fire is the fact that there are several apps that are gaining traction, gaining momentum that compete in the learn a language space. In this case, oftentimes learning, how to speak English, how to pronounce it, leveraging AI. And there are a lot of players that are growing with literally millions of customers. They talk about, I think Elsa has 50 million users, love Elsa's AI roleplay for real world English learning. And so it is important to recognize Duolingo is not alone in this space. And there's broader fears of the AI custom tutor coming up and just destroying Duolingo's business model. Is that a legitimate risk investors need to think about? Personally, as I look at this and think about it, I actually go to Flash. I'm the co-founder of Flash, leveraging the most cutting edge AI models available to empower investors. The reports are free, so come check it out. But there is a premium subscription as well, but you can pull reports on any company in the world. This is the excerpt from Flash calling out some of the competitive advantages that set Duolingo apart. And I think this is important to reflect on. One is, yes, you might have very powerful AI, and you might have the ability to have this AI tutor that knows you in your pocket, that sees all your history, that can help create a custom learning program. The question is, are we entering an age where companies that aggregate this data are no longer relevant when you have a custom tutor in your pocket? I suspect there is still going to be room for companies like Duolingo. And that's where it gets to the second point. Yes, the first point being they have this brand that people are aware of. They're the number one in the space, and they're figuring out clever ways to gamify it so it's enjoyable to learn another language or to learn another subject. Maybe it's chess, maybe it's math. I think there's a huge runway ahead of them for them to explore other subjects. It doesn't just have to be language. And this is the second key point from Flash, calling out, look, when you have 50 million daily active users, it is a massive data moat because you get literally all this A/B testing to see exactly where in the lesson someone walks away. Someone says, you know what? I got turned off. I broke my streak. My dad, I think, has a 1,000+ day streak, maybe like 1,300 day streak. And so some people love it. And Duolingo has mastered that ability to keep you hooked, where you're willing to pay a little bit, keep that subscription. And, this ability to say, hey, we know how to really tweak that algorithm. And I'm not sure that a custom AI that doesn't have that 50 million users will be able to create that agenda for you to say, hey, you can now learn this subject in such a way that it's truly an experience where you say, yeah, I'm happy now. I'm really, I'm going to stick with it. I'm going to stick through the whole course. Whereas Duolingo, you're more likely to. So I think that there is that element to consider. Now, we might be heading into a future where custom AI is capable. It's so good and it can read you, based on figuring out when you stop, your streak, and it says, hey, let's try this again. It's possible we head to that future. I'm not sure we're there in the next year or two, next couple of years. So that does create this opportunity for Duolingo to keep crushing it. And then there's also the, aspects of AI, which is that it's leveraging AI to make it more of an engrossing experience where people can, interact and learn. And so, as we look at Duolingo, this sort of wild ride, you have suspicion that AI might disrupt it. At the same time, AI is rapidly turning into a tailwind for them. Look at the actual results. They're actually growing significantly. So what's next as we think about Duolingo stock? Because it's, come under so much pressure in just a few months. First of all, none of this is financial advice. I'm just sharing a few of my personal thoughts, as we're looking at it. Also, recently, Ratnesh T, a premium subscriber, he wrote, I really enjoy your investing channel. I first came across it in early 2021, but I stopped investing after some heavy losses that year. I decided to start investing again toward the end of 2024, and yours was the first channel I came back to. I really appreciate your thoughtful, no hype approach. It's refreshing and helps keep my perspective grounded. And so as we look at Duolingo, the shares have gotten clobbered, nearly 70% in a few months. And the reason why I think it's important to reflect on that is because this is the nature of investing in stocks. You should expect to to have drops. You should expect to have volatility. A 70% drop in Duolingo is, in my opinion, not shocking at all, especially when you consider the starting valuation. I should also mention, it is very typical, for folks to see this volatility and be like, screw this. As a matter of fact, one of my top holdings lost about 30% of its value, maybe even a little bit more, in the last few days. One of my subscribers said, F Daniel and F your checklist. That was the message I got. And the reason why I'm sharing this is because if you're not temperamentally, suited to stomaching that sort of volatility, you need to be prepared for it. It's better to be aware of it now versus when the market's, the market's still within a couple percent of its all-time high. The market could fall. Any stock you buy, in my opinion, any stock you buy, you could wake up tomorrow and it's 20, 30% lower. That's just the nature of the game. It's the nature of the volatility of the markets. And so you need to be prepared to say, if this falls 30% tomorrow, am I prepared to stomach it? What will I do? I think it's the Mike Tyson quote, everyone has a plan until they get punched in the face. Getting punched in the face regularly happens, metaphorically speaking, with investing, because you routinely have stocks that will get clobbered. I've had a handful recently. It's not pleasant, but this is where it gets back to the key aspect, which is that, in my opinion, yes, you're going to have these moments where you feel like you're falling down a dark tunnel screaming, but I think you need to center yourself. And that gets to, Ratnesh's point earlier, which is that you want to have this no hype, grounded perspective. That's why I have this checklist. And you may not like it. You may not be happy. You may not be happy with seeing volatility in stocks. But if you, aren't prepared for that, for the volatility, and you also, it's important to recognize, zooming out once again, go look at Amazon. Amazon lost like 90% of its value in the .com implosion. Imagine if you had said Amazon's a compelling business at the peak. You would have actually been right. You would have been investors would be saying, you're such an idiot for the next few years while Amazon lost 90% of its value. But over the long term, you would have made thousands of percent. So it's super important for you to understand, one, there's going to be volatility, just like you're seeing with Duolingo. Two, you need to make sure you have the right time frame. Because if you're thinking, hey, I'm going to be so smart and I'm going to make this trade over this next month or this next quarter, that's not my game. I'm thinking 3 to 5 years minimum. So if you're looking at and say, hey, I need to make my returns this month, it's not right for you. Maybe you can find it. Maybe you can be one of those very rare traders. But the truth is, most of that type of game is very short-term oriented, zero sum. You're really playing on valuation changes, and you're not really playing for, does this business compound over time? And so I encourage anyone that's thinking about Duolingo or any stock that you really need to make sure you have the right time frame, because arguably markets near all-time highs would not surprise me to see market reset at some point and be a lot lower. So the time to panic is before the market, has that, in terms of thinking for yourself, like, hey, am I actually going to hold on to these positions or will I panic? You'd rather panic at the top than, after, let's say, the market falls 30%. So important things to think about. I stay grounded by looking at this checklist. And the reason being is, look, first of all, with any stock, never a certainty that it's going to work out. But also really important, I think having a checklist, a repeatable process, increases the odds that you can have a favorable outcome. Doesn't make it a guarantee, but improves the odds, in my opinion. And so in this case, for example, you can have management make poor choices. But if management owns a large chunk of the company, yeah, they could still make poor choices. But believe me, they're feeling it if they are. Because at the end of the day, if you have that true management alignment, maybe even they're the founder of the business, you're more likely to get, hey, they're going to make rational choices that benefit all shareholders over time. So I predominantly focus on management alignment, obvious growth, compelling valuation, limited blowups, blowups. That's something I think about from a competitive perspective. But let's apply Duolingo through this list. So as we look at management alignment, we see, look, the founders, the co-founders, they own literally hundreds of millions of dollars worth of stock. They're still running the company. One of the challenges, pushbacks, is that hacker Severin, once again, he's the co-founder, he's chief technology officer. He's been selling tens of millions of dollars worth of stock. So there might be some pushback saying, hey, yeah, you might own hundreds of millions of dollars worth of stock. You might be able to control the company, but you're also cashing out. Is that an alarm for shareholders? Personally, I'd rather see founders run the business. Generally, they're more mission oriented, and I believe this team is. Thinking about the long-term potential, I think management's thinking right about this. There are literally billions of people in the world that are either looking to learn a foreign language or just looking to learn new materials. And I believe there is a huge opportunity to take AI and take any subject and say, let's figure out how to sort of give you that knowledge. We're not quite at the matrix yet where you can download the knowledge to your brain. Man, I wish I could do that. But having some pleasant experience where it's gamified and you can interact with it and you're like, oh, I want to keep my streak going, as millions of people do, I think there's just tremendous runway for them beyond languages over time. They're also this category leader. They have the algorithm, they have the data, they're figuring out the human patterns. So there's a lot to see that I like here with them. And it wouldn't surprise me if they're able to keep growing going forward, just based on the tremendous runway, tremendous potential, but there is tremendous disruption risk from either the custom AIs or just all these, companies looking to compete. That said, there is something to be, there is value in having one of the best recognized brands where people go, oh, I don't remember any of the three that I showed earlier of these upstarts that are, trying to eat into Duolingo share. But Duolingo, I remember this sort of crazy owl, this green owl. Okay, bird brain, whatever. It's easier to remember. So I understand there's some real intangibles that could continue to drive growth. Now, here's my hypothetical framework. Of course, it's hypothetical. Stock price go higher, can go lower. A lot depends on their execution. A lot depends on sentiment, what's going on with the market. But as I, look at this, around $184 per share, around $9 billion market cap, growing shy of 40% this year. This is based on guidance, assuming long-term operating margins of, let's say, high 20s. Management has talked about 30 to 35% EBITDA margin long-term. So let's say 25, 30% operating margins. This is the real question. This is the one I sort of struggle with, which is what is the growth rate over the next 5 years? I think anyone that's a bull, I don't own shares in Duolingo, but anyone that's a bull is really making a call that you think they're going to be able to keep growing at 20% per year going forward at a minimum, and that 5 years out, they should have a 30 times earnings multiple and 30% operating margins. All of this may be possible, but I don't feel like I have enough conviction on these data points to say, yeah, this is why it's a no-brainer. Because even in this high scenario, you're really only talking about, 100% plus upside, let's say 150% upside. And so I'd frankly say it's a little too difficult for me at this point, but it might actually play out. I mean, overall, looking at the framework, it's not like it's saying one scenario you're down 30% and the other scenario is up 100%. Generally, this is more of a favorable setup. So if you had to say, like, Daniel, buy, sell, or hold, I'd probably be somewhere between buy and hold on this personally. That's not a recommendation, but that's if I were considering it, just because 15% growth versus their 40% recently, it's what do you think is the growth rate that they're going to have? How certain are you that it's obvious that they're going to be able to convert those free users into paid users, keep, growing that free funnel that then converts to the paid? So these are the questions that make it a little bit tougher for me. Also, if there's a recession, do people, cancel or downgrade. I'm not sure. I sort of doubt it because, for a couple bucks, you got this subscription. Maybe you enjoy learning the subject. Maybe it's for work that you want to learn another language. So overall, I like looking at a company like this. Hyper growth, attractive growth, attractive margins, free cash flow positive, cash flows, accruing to shareholders, net cash balance sheet, founder led. So there's a lot that I like. I think the two key aspects that that where it sort of stops with me is I would prefer somewhat of a lower valuation, and I would prefer a little more clarity on exactly why, if I were to pull the trigger, why I would feel comfortable with that 20% sort of as the base. Because if you're really talking about only 17.5%, then you're talking about closer to a teens return over time. Not bad, but it's not the crazy asymmetry where maybe you're targeting 300% upside type of potential. I hope this video has been helpful for you. Thinking about Duolingo, talking about the volatility in the market, thinking about the lessons beyond Duolingo, which is that it's important to recognize there will be volatility. There will be, volatility goes both ways. You can have stocks lose tremendous amounts of value in short periods. And it's important for you to be aware of this, ideally before it happens. Sometimes it happens, while you're going through it. And for you to think about what type of investing journey you want to have. Are you, long-term oriented? Are you comfortable buying something and then seeing it drop significantly the next day? These things can happen. I hope this video walking through Duolingo has been helpful. Thanks so much for watching. I'm Daniel from Unrivaled Investing.